Hey, how you doing? And welcome to Livewire's Buy, Hold, Sell. I'm Selby, and today we're off to the races. We're going to be taking a look at 5 stocks that are speeding past their peers with exceptional earnings growth expectations for the year ahead. It's the Olympics of the ASX, if you will, but it's not all gold medal winners here. It's not like the swimming for Australia. So to find out where the consensus has it wrong, we're joined by Jennings from Marcus Today and James Gerrish from Market Matters. First up today, we have a crowd favourite. It's Pro Medicus, which is expected to grow its earnings per share by 31% over the year ahead. James, I'm going to start with you. Is it a buy, hold or sell?
It's hard to do anything but a buy on PME. Hugely successful against their competitors. They're growing revenue, they're growing their margins pretty successfully, and they're moving their business more successfully than others into the cloud and this software as a service approach. So it's a buy. The trends in the business and the trends in the stock are going particularly well.
Okay, Pro Medicus shareholders are probably laughing straight to the bank. Its share price is up 106% over the last 12 months. Henry, is it a buy, hold or sell?
It's a buy. It's not cheap on a PE basis, but they're doing all the right things. Big contract wins in the US. Things are going very well. Good management, good product. Nothing wrong with this one at all, but it's not cheap, so they can't afford to slip up, but for the time being, they're making all the right moves. They're certainly a gold medal winning performance. This is a buy.
Okay, let's move on to Audit now. It's expected to grow its earnings per share by 53% in FY25. There's a little bit of controversy around that stock. I know you like to talk about a little bit of drama, Henry. Can you take us through that drama and then also tell us if it's a buy, hold or sell?
It's a hold, only because it's such a low price at the moment. It's been smacked. This is certainly not a gold medal performance. It's probably a bronze medal performance. They dominate in the AV industry, in the Dante side of things for the audio. And they're trying to get into the video side of things. And that does seem to be taking its time. And also feedback I've had from the industry, someone emailed me the other day, and really it's still taking time, and the share price is reflecting that, and there's a lot of expectations in it, and it hasn't really delivered as yet. So these prices, you couldn't sell it because it's already been sold off, so it is a hold from here, but it needs some good news on the video side of things.
Okay, its share price has lifted 58% over the last 12 months. James, over to you. Is it a buy, hold or sell?
It's a hold, Ali, and we do hold Audinate. We've owned it since 2021, so it's been a good stock for us. But to Henry's comments around things taking longer and costing more, I think is a valid one. So we're going to be really conscious of the position size we take into this upcoming result. They report in mid-August. We've had a CFO resignation. Rob Goss has stepped down. The company was at pains to explain that there was nothing to see there. We had multiple calls with the company around that, but the share price has continued to slide. So to me, I love the longer term strategy they've got. They've executed it exceptionally well over the last couple of years. I'm nervous about the upcoming results for this one.
Okay, next up today we have Telix Pharmaceuticals. It's expected to grow its earnings per share by a whopping 98% in FY25. Over to you, James. Is it a buy, hold or sell?
Look, it's a sell for me.
Really?
Everyone loves it, but I've got to stress. When I started investing 20 years ago, it was stressed to me that know what you don't know, know that you don't understand things. And I think one of the things that I don't really understand is the process around FDA approvals and product approvals, and having a really good handle on how that can impact the business over time. So, when I think about all the businesses on the ASX, there's a lot of companies out there that I have a good understanding of, and I can look into the future with some confidence. I simply don't have that on Telix, and it's a shame because it's been a great performer, and it's cost us performance not being involved in that. But I won't go out there and invest in something that I don't inherently understand.
It's been great for my portfolio. It's up 65% over the last 12 months. Henry, for you, is it a buy, hold or sell?
It's a buy. There are a few things in life you can be certain of. Death, taxes, and Telix Pharmaceutical, I think, is the third one. It has done
definitely a sell.
It has done extraordinarily well. In the last day or so, they've had a little bit of a hiccup with an FDA filing for one of their things, more procedural than anything else. They have got a very, very good product, and they are earning a lot of revenue as well. And the FDA filing that seems to be a little bit delayed is not going to affect the guidance they put out. So I still like this one. They got sold down a little bit. They did a convertible note, which required a little bit of hedging in place, and they did a bit of a placement to do that hedging. So it's taken a little bit of the wind out of the sails, but as I say, there's 3 things in life you can be certain of. Telex is the third of those.
Okay, next up today we have uranium production company Paladin. It's expected to grow its earnings from nothing to something, so it's going to be a ridiculous amount. Staying with you, Henry, is it a buy, hold or sell?
It's suffered, and I think it's a hold at these levels. We are pregnant with news in August, not so much from Paladin, but from the sector in terms of Cameco and Kazatomprom in Kazakhstan. The problem that Paladin has at the moment is it's complicated what was a simple story. The Namibian Lager Heinrich going back into production was a nice, simple story we could understand. Now it's in the middle of taking over a Canadian company as well, and it just complicates things, and it takes management's eye off the ball. They should be pushing ahead big time in Namibia. I think it's been suffering because of that. It's a hold for me. I don't mind the uranium theme, but I think at the moment there's probably better ways to play it than Paladin until they sort out this acquisition, bed it down, get it sorted, and it becomes, focused again.
Okay, do you agree, James? Is it a buy, hold or sell?
I think it's a buy, Ali, but I can understand why it's been sold down from its recent highs. So we own Paladin. It's been a great story for us over the last couple of years. But as I said, I can understand why the stock price is weak. When you go out there and buy, they had an asset that they effectively was, bought cheaply or owned cheaply. So it didn't owe them a lot of money. The uranium price ripped. They're selling into a high price environment. That's a great scenario for making money. They've doubled down on uranium by buying fission or trying to buy fission into strength. So if uranium plays out, then this is a greater play on the leverage nature of that. They'll do better than if they hadn't bought fission, but it adds an element of risk. They were going to throw off a lot of cash from Langer Heinrich. They've now got about $850 million or so to fund development of fission. So it changes the dynamics of what they are.
Okay, last up today we have Hub24, which is expected to grow its earnings per share by 34% over the year ahead. James, last one for you today. Is it a buy, hold or sell?
It's a hold for us. This one has been a phenomenal performer. The investment platforms have been phenomenal. It's pretty much doubled in the last year. If I think about Hub moving forward, I think about a couple of different things. So margins, I think margins will probably go lower, and the company's guided as such. When you get bigger balances on the platform, then margins come under pressure. Cash rates coming down as a negative for them. And then if I think longer term, I can picture Hub24 as being a hub for all personal finance. So moving just out of the investment side into a broader suite of products, which costs money. So to me, it's a hold, phenomenal success story, hard to bite after it's doubled.
Yeah, its share price is up 77% over the last 12 months. Henry, buy, hold or sell?
I think I'll put a slight buy on it. As James says, it's hard to hold it when it's doubled. But for me, we've got mandated increases coming through in terms of our superannuation contributions that we get from our employers. So, that's got inbuilt growth. These platforms, the ones that are doing well, are starting to do really, really, really well. What was it, 84.5 billion funds under administration or something at the last announcement. So, the bigger get bigger and the smaller drop by the way. We've seen it with the likes of Premium, which has struggled somewhat, whereas Netwealth and Hub really have sort of now become the market leaders. And I think that success breeds more success. So it's hard when it's doubled, but I think it's still, it's still a great looking chart, great looking company. And, we're all getting older, unfortunately, and we're all investing more and planning for our retirement better, I think, as well. So, that's in their favour.
Okay, well, I hope you enjoyed that episode of Buy, Hold, Sell as much as I did. If you did, why not give it a like? Remember to subscribe to our podcast and YouTube channels. We're adding so much great content just like this every single week.